Get ready, tech enthusiasts. The news cycle is moving at lightning speed, and here at Qualcomm Pulse, we're bringing you the absolute latest, must-know updates that are shaping the future. From groundbreaking collaborations sparking massive industry speculation to significant financial maneuvers by key players, this episode is packed with insights you won't want to miss. We're diving deep into the stories that matter, giving you the edge in this fast-paced world. Let's jump right in. First up, a partnership that's got everyone talking is a colossal acquisition on the horizon. Then, we'll track some major stock movements from a titan in the industry. And we've got even more to unpack. Stay tuned, because you're about to get the inside scoop. Don't go anywhere, hit that subscribe button and ring the notification bell so you never miss an update. A colossal deal on the horizon. Nvidia and MediaTek's collaborative efforts on the GB10 Superchip have ignited a firestorm of speculation, leading some to believe a massive $73 billion acquisition of MediaTek by Nvidia might be on the table. However, reports suggest this sensational deal is unlikely to materialize, with experts pointing to fundamental strategic misalignments and market dynamics that make such a merger improbable. The collaboration between Nvidia and MediaTek on the GB10 Superchip is a testament to their complementary strengths, with MediaTek contributing its expertise in CPU and memory design, while Nvidia brings its formidable GPU capabilities. This partnership has already yielded impressive results, integrating Nvidia's Blackwell GPU with MediaTek's system-on-chip design. The GB10 itself is a marvel of engineering, featuring 20 ARM v9-2 CPU cores, a Blackwell graphics core capable of 31 TFLOPs of FP32 performance, and support for up to 128 GB of unified LPDDR5X memory. All of this is built upon TSMC's advanced N3 process node and utilizes a dual DLIT packaging format, showcasing the cutting edge of semiconductor technology. Despite these technological advancements and the potential synergies, the idea of Nvidia acquiring MediaTek faces significant hurdles. According to Anu, Nvidia's strategic evolution into an AI infrastructure company, focusing on system-level solutions rather than just individual chips, means that acquiring MediaTek might offer limited added value on the system side. Nvidia's supply chain has already expanded beyond traditional manufacturing to include crucial elements like cooling and PCB production. Integrating MediaTek, a leader in smartphone SoCs, could offer some supply chain benefits and access to ARM-based chip expertise, especially as Nvidia looks to expand into laptops and gaming devices. However, these benefits may not outweigh the immense cost and complexity of such a monumental acquisition. Furthermore, the rumored acquisition price of $73 billion is considered by some to be significantly undervalued, especially given MediaTek's market position. As Taiwan's third-largest company by market capitalization, behind only TSMC and Foxconn, and its status as the leading IC design firm, MediaTek holds considerable strategic importance. Any acquisition attempt would undoubtedly face intense scrutiny from regulators, particularly under current geopolitical considerations. The sheer scale and strategic nature of MediaTek would likely trigger rigorous reviews, further diminishing the probability of a successful takeover. Therefore, while the Nvidia-MediaTek partnership is a significant development in the tech landscape, the acquisition rumor appears to be just that, a rumor, unsupported by the strategic realities and regulatory complexities involved. This potential acquisition buzz has sparked lively debate online, with industry analysts weighing in on the strategic fit and financial feasibility. While some see the technological convergence as a precursor to consolidation, others emphasize the regulatory and strategic barriers that make a $73 billion deal highly improbable. But the news doesn't stop with potential megamergers. Keep watching as we uncover significant financial moves made by key figures within the very company at the center of these rumors. Nvidia directors' multi-million-dollar stock sale. In a significant display of insider activity, Don Hudson, a director at Nvidia, has executed a substantial sale of 90,000 shares, netting an impressive $15,380,640. This strategic financial maneuver comes at a time when Nvidia's stock continues to be a major focus for investors and analysts alike, prompting discussions about the company's trajectory and the confidence of its leadership. This transaction, which took place on September 4, 2025, provides a concrete data point for those closely monitoring Nvidia's stock performance and insider trading patterns. While individual stock sales by executives are common and can be driven by a variety of personal financial reasons, the sheer volume and value of this particular trade naturally draw attention. It raises questions about the director's personal outlook on the company's immediate future, even as broader market sentiment towards Nvidia remains largely positive. Adding further context to Nvidia's market position, Spark, TipRank's AI analyst, maintains an outperform rating on NVDA. This positive outlook is underpinned by Nvidia's robust financial performance, favorable technical indicators, and a strong track record during recent earnings calls. The company's revenue growth, impressive profitability, and its strategic dominance in the burgeoning AI infrastructure sector are key factors contributing to this optimistic assessment. Although Nvidia's high price-to-earnings (PE) ratio suggests a premium valuation, analysts believe that the company's long-term growth potential in critical areas like AI and data centers justifies this valuation and continues to inspire investor confidence. Nvidia's year-to-date (YTD) price performance stands at a notable 27.07%, reflecting its strong market presence. The stock's average trading volume is substantial, indicating high liquidity and investor interest. Currently, Nvidia boasts a market capitalization of $4.15 trillion, a figure that underscores its status as a tech giant. Despite the director's sale, the overall technical sentiment signal for NVDA remains buy, suggesting that broader market indicators still favor the stock. The implications of this insider sale, while potentially concerning for some short-term observers, must be viewed within the broader context of Nvidia's sustained growth and strategic importance in the technology landscape. The company's continued innovation in AI, graphics processing, and data center solutions positions it for ongoing success, making the market keenly interested in every move, both from the company and its key personnel. This significant stock sale by an Nvidia director has certainly added another layer of intrigue to the ongoing narrative surrounding one of the market's most closely watched companies, prompting further analysis into insider confidence and stock valuation. While we've seen a major director make a significant financial move, the top executive is also making headlines with substantial stock transactions. Stick around as we break down those moves next. Nvidia CEO's strategic stock sale. Nvidia Corporation's CEO, Hsun Huang, has recently engaged in a significant stock sale, offloading 75,000 shares of the company's stock for a total value of $12,723,750. This transaction, executed at an average price of $169.65 per share, represents a minor adjustment of 0.1% in his substantial holdings, which, following the sale, still amount to an impressive 72,698,366 shares, valued at over $12.3 billion. The details of this trade were formally disclosed in a filing with the Securities and Exchange Commission. This move by the CEO comes amid a period of intense scrutiny and high valuation for Nvidia, a company that has become a cornerstone of the artificial intelligence revolution. Such insider sales, while often routine for portfolio management, invariably attract attention when they involve the chief executive of a company of Nvidia's stature and market influence. The sale provides a data point for investors trying to gauge executive sentiment, even as the company continues to report strong financial performance and receive positive analyst ratings. Nvidia's recent quarterly earnings report further highlights its robust performance. The company announced earnings per share, EPS, of $1.05, surpassing the consensus estimate of $1.01 by 4 cents. This strong showing contributed to a remarkable return on equity of 101.74% and a net profit margin of 52.41%. Revenue for the quarter reached $46.74 billion, exceeding the consensus estimate of $45.65 billion and marking a significant year-over-year increase of 55.6%. Looking ahead, Nvidia has provided guidance for Q3 2026, with analysts collectively forecasting an EPS of 2.77 for the current fiscal year. The stock itself has experienced fluctuations, trading around $170.62 with a considerable trading volume, reflecting ongoing investor activity. Nvidia's market capitalization stands at a staggering $4.15 trillion, accompanied by a P/E ratio of 48.61 and a P/E to growth ratio of 1.3. The company demonstrates strong financial health with a low debt-to-equity ratio of 0.08, a quick ratio of 2.96, and a current ratio of 4.21, indicating excellent liquidity. Analysts remain largely optimistic about Nvidia's prospects. Numerous research reports have revised price targets upward, with ratings predominantly leaning towards overweight or outperform. For instance, Barclays raised its price target to $200, J.P. Morgan Chase & Co. to $215, and Oppenheimer set a $225 price objective. The consensus target price, according to Qualcomm Pulse, stands at $207.69, with a moderate buy average rating from analysts. This sentiment is echoed by institutional investors, who hold approximately 65.27% of the company's stock, with many recently adjusting their positions. Despite the CEO's sale, the market's overall view of Nvidia remains strong, buoyed by its pivotal role in AI, data centers, and its expanding product portfolio, which includes GPUs for gaming and enterprise, automotive platforms, and Omniverse software. The sale, therefore, is likely viewed as a strategic financial decision by the CEO rather than a reflection of diminished confidence in the company's future. While the CEO's stock transactions are noteworthy, another recent sale by a key executive adds another dimension to the insider activity at Nvidia. We'll cover that next. Nvidia CEO sells over $13 million in stock. Nvidia Corporation CEO Hsun Huang has once again made headlines with a substantial stock sale, offloading 75,000 shares for a total value of $13,084,500 on Friday, August 29th. The shares were sold at an average price of $174.46, a transaction that represents a marginal 0.1% decrease in his ownership. Following this sale, Huang still holds a commanding 72,773,366 shares, valued at approximately $12.7 billion. This significant trade was documented in a filing submitted to the SEC. This transaction follows closely on the heels of another reported sale by the CEO, underscoring a period of active portfolio management at the highest level of Nvidia. While such sales are common for executives managing their personal finances, the sheer scale and timing, particularly amidst Nvidia's soaring market valuation and critical role in the AI boom, naturally capture significant market attention. Investors often scrutinize these insider moves for any indication of executive sentiment regarding the company's future prospects. Nvidia's financial performance continues to be a dominant narrative. The company recently reported its quarterly earnings, revealing an EPS of $1.05, which outperformed the consensus estimate of $1.01 by 4 cents. This robust performance is complemented by a stellar return on equity of 101.74% and a healthy net profit margin of 52.41%. The company's revenue for the quarter hit $46.74 billion, surpassing analyst expectations of $45.65 billion and marking an impressive 55.6% increase compared to the same period last year. Nvidia has projected its Q3 2026 EPS, with analysts collectively anticipating 2.77 earnings per share for the current fiscal year. The stock's market activity shows it trading around $170.62, with daily volumes near its average, indicating sustained investor interest despite the executive sales. Nvidia's market capitalization remains formidable at $4.15 trillion. Financial health indicators are strong, including a low debt-to-equity ratio of 0.08, a quick ratio of 2.96, and a current ratio of 4.21, pointing to strong liquidity and operational efficiency. Analyst sentiment towards Nvidia remains overwhelmingly positive. Reports from various financial institutions consistently upgrade price targets and maintain buy or overweight ratings. For example, Stifel Nicolaus raised its target to $212, Piper Sandler set one at $225, and D.A. Davidson adjusted theirs to $195. The consensus target price, as tracked by Qualcomm Pulse, is $207.69, with a prevailing moderate buy rating. Institutional investors, holding a significant 65.27% of Nvidia's stock, have also been actively managing their stakes, with several recent reports indicating increases in their holdings. Given Nvidia's indispensable role in powering AI advancements, data centers, and its diverse product ecosystem, from gaming GPUs to automotive solutions, these executive stock sales are largely interpreted within the context of personal financial planning rather than a signal of underlying weakness. The company's strategic positioning and continued innovation suggest that the market will continue to focus on its growth trajectory. As we wrap up today's deep dives, we'll bring you a rapid-fire recap of all the top stories and tell you how to stay connected with us for all your essential tech updates. That's all the groundbreaking news we have for you today on Qualcomm Pulse. We covered Nvidia's potential acquisition rumors, tracked significant stock sales by Nvidia's director Don Hudson and CEO Hsun Huang, and explored the details of the GB10 Superchip collaboration. Make sure to like this video if you found it informative, subscribe to Qualcomm Pulse for more essential tech insights, and hit that notification bell so you're always in the loop. Follow us on all our social channels to join the conversation and stay ahead of the curve. We'll see you in the next episode.